Okay, welcome to today's Market Snapshot from LCG. It's Fed day, so necessarily we want to talk about the US dollar. There are a lot of other things going on this week. Politically, we've got the Dutch election, that can affect the euro. We've got the Bank of England meeting, we've got the Bank of Japan meeting, that can affect the pound and the yen. So I thought the best thing to talk about was gold, which has actually probably been the most sensitive asset class to the change in expectations for the Fed in the last couple of weeks. Expectations went from sub 30% of a rate hike in March to pretty much 100% at this stage. And the US dollar had a mixed reaction. The euro, other central banks, they're playing into the fold with individual currency pairs. Gold fell off a cliff. Naturally, gold is typically inversely related to the US dollar. But there are signs of beginnings of a bottom in gold at the moment after its sharp decline. And we want to have a look at the chart now and have an assessment as to whether this Fed meeting could be a reason why the US dollar was bought on the rumor but sold on the fact. Gold was sold on the fact, sold on the rumor and bought on the fact. So just looking at this weekly chart for gold, it's honestly a bit of a mess. It's really a sideways trend without too much direction. Anytime we've seen the beginnings of a directional move, it's correct largely the other way. So obviously we had this big move at the beginning of the year, a big move at the end of last year, the subsequent large correction post the US election. We've had a good start to this year, but that's suddenly seen a large correction, is where we find ourselves at the moment. But as I said, if we drop down to the daily chart, we have dropped to a fairly significant level. Using our Fibonacci's here, you can see that we're at the 50% retracement of this move of the year. So we've pulled back half of the year's gains from the lows at the end of last year. So potentially that's an area of support. It's just above this low that we saw in early January too. So this is a big meeting from the Fed. Price is looking pretty soft, but if we pull down to the 4-hour chart, you can see that price pretty much vertically dropped down, came just shy of the 50 level, and has been trying to probe to the upside, but so far failing to do so. So there's no real confirmation of a reversal at the moment. What we're looking to see from today's meeting, once we get the price action, after the decision, after the press conference from Janet Yellen, can gold break out one way or the other? So you can see that we had this little peak here. We tried to probe to the top side, got a failed breakout. This little breakout from this high didn't go too far. We dropped right down to the lows again. This little breakout from here failed. That's when we dropped to the lows, and we're back to that level now. So to my mind, really, first it's got to be a close to the short term above 1208 as our first signal. And then if I readjust this trend line a little bit, if I readjust this trend line to look a little straighter here, it's pretty much going to be this 1209 to 1211 on the top side, where we really probably want a daily close above there to give us an indication that actually a bottom's in place and we've got a move back to the top side. And I would put this where we had this big support level broken and we saw this last leg of the move down around 1225 would be the next big area of resistance that could cap any move to the top side here. So that's it for our Market Snapshot video today. We're looking at gold leading into this Fed meeting. We're going to get some volatility during this Fed meeting. That's almost to be for sure. And so will it show us gold putting in a bottom after this sharp decline or potentially a continuation? We'll soon know. It'll give us a clue on gold's direction either way. Now, if you like this video, then please register and sign up with LCG on the Facebook page and on YouTube to see these videos just as they come out.